Okay, in this tutorial, we're going to talk about how to trade the gaps. In this example, you can see JNUG has gapped up pretty much from last week, and because yesterday, Monday, was a holiday, you can see what has transpired. So we closed at 21.19 and we opened today, looks like at 21.25 and gapped up to 22.64 and hit a high of 22.97. So it's looking like we got about $1 in here from the pulse wave. Let's take a look at that real quick. Okay, you'll notice on this morning's weekly pulse wave price triggers, this came to you by one of your own who added this as a suggestion, and I think it was great. We ran with it. He added a reset button and a search button. Basically, if you type in anything like under the ticker, the 52 low, the false, anything under this category here, what happens is it tells you enter search criteria in row 6. So this is row 6. You can enter anything from the instrument name to anything else under each column, and they'll bring it up. In this case, we're looking at the JNUG, and as you can see, for this morning, the pulse wave for this week is 2173 right here. It has a 9/11 alert, rally alert also. You can also see that you have a 70 uptrend, so the uptrend is locked in. There's a green light under the downtrend telling you that you need to refer to the uptrend. All right. Under our sell side of things, there is no alerts. All right. No alerts. You got a 311 here, which means that there is a swing trade situation setting up. If you want to be more specific, you can come over here. Look at the bottom here where you have securities tab, your traditional securities tab. The advanced filter tab is where we're at. If you click here to legend, it will go ahead and explain to you what each thing is. So let's go ahead and look at that. All right, as you can see here, the buy side is the left side of the sheet. 911 is a rally alert. 411 means oversold. 311 is a swing trade. It means that you have a positive swing VIX with positive momentum. A 40 is a positive swing VIX. An 11 is positive momentum. And a 78 is a positive pulse wave. Likewise, on the sell side, which is the right side of the sheet, 911 is a crash alert. 411 is overbought. 311 is a swing trade where you have a negative swing VIX with a negative momentum. 40 is negative swing VIX. 11 is negative momentum. And 78 is negative pulse wave. We will go more in depth into this in our later tutorials. But for now, we're dealing with how to play the gap. So let's go back over here to our advanced filter tab. All right, and here we are. We're dealing with JNUG. And again, you see that the pulse wave is at 2173. Now let's go back and take a look at what the market's doing. Okay, so you can see here the market 2293 is the high, and the JNUG is currently at the high. So just like I explained to you in the chat room, basically it is as this. Okay, how to trade the gap. I touch on this a little in the introduction to the Pulse Wave System study book. Those of you who bought the study course, the introduction to the Pulse Wave System study book came with it. And here we go. So if a stock gaps up or down $1 or less, you basically have one or two options. First option is to trade it, either with a market order or, either with a market order to jump right in or use the limit order settings to setting the price as the pulse wave price trigger from the sheet. And in this example, that was $21.73. Usually on gaps, the market will pull back on the 9:30 open, thus filling the overnight gap. However, you do run the risk of not getting in sometimes if you choose the latter. Traditionally, a gap up or down of $1 or less is no big deal. Your second option is to stay out and do nothing. This option is self-explanatory. One more note here, since we're talking about the gaps. Understand that if you put your order in before the market opens, and let's say you didn't look at the pre-market, you're not paying attention that the market gapped up, or just say you don't care. When you put in your orders on a buy stop, which is what the system calls for, is what I recommend. Yeah, your order's still going to execute when the market gaps up. You're just going to be filled at whatever the market opens, whatever that opening range is. That's where you're going to be filled at. So it could be possible. Like right now, the JNUG is at the high of the right near the high of the session. So far, I hit 22.97. Right now, it's at 22.94. If it was 9:30 a.m. Eastern Standard Time right now, you'll be filled between the 22.94 and the 22.97 if it trades back up there. So let's say you get filled at the 94. What's going to happen is, traditionally the market will pull back and fill somewhere in the gap before moving higher, and so the market would take you along with it. You just have to sit through the little minor pullback and then it goes back up. That's how that works. But you do run a risk, like I said, let's say you didn't have a stop, you had a stop limit in. Well, it's not going to put you in the market at all unless it pulls back to your stop limit of $21.73. So if you put your stop limit in at $21.73, stop $21.73 limit, you're not giving the stop limit any wiggle room to fill you. So if it doesn't hit that price, it's saying you have to be filled at $21.73 or else it's not going to fill you at all. So again, I like to use what is called the 5-cent rule on equities. So I put in 21.73 plus 5 cents. So 21.73 stop plus 5 cents will be 21.78 limit. So you're giving the market a 5-cent range to fill you in, okay? That's how that works. And it should work if the market is going to behave like it normally does and pulls back on the open. If you're afraid that it may not do that, then fine. Go ahead and, like I said, if you don't have an order working, you can always market yourself into something. All right, and just make sure you put your stop in like you're supposed to. So let's take a look at that one more time. See, this is why I like to use stops. I only use stop limits, like I said, in highly illiquid markets and/or markets with very wide spreads. I do a stop limit because I don't want to get screwed. So most of the time, you're not going to have to use a stop limit. You're just going to use stops. Doesn't matter if the market gapped up. It's going to get me in. Because peep this. Okay. Today, 21.73 is the entry, right? But look where the stop loss is. It's at 18.31. It's not a big deal. So if this market's going to do something ridiculous, like, sell off, it's gonna get me out at 18.31. I don't want to be a part of this. I don't want to be bullish if it takes out 18.31. If it does that, I'm going to go to the sell side of the sheet, and I'm going to be short at 18.31 with my stop at 21.73. Boom, that's how you do it. Again, under the advanced filter tab, see it says sell short side. Go short, use sell stop or sell stop limit. Likewise, on the bull side of the sheet, I highlighted it green for you. This is the buy side of the sheet. Go long, use buy stop or buy stop limit. Boom. It tells you what you need to do. Another note for you, just something for you to think about. Technically speaking, just looking at the sheet and remembering what you have learned so far about the sheet, what is JNUG doing right now? Is it in a positive or negative pulse wave right now? I'll give you a moment to think about it. Think about it. There's a 0 right here, but this one has a price on it. What is that saying? All right, time up. This market is negative pulse waving right now. It's negative pulse waving because you got a 0 here, right? But you got a number under this column here, okay? Remember the previous tutorials? So what it's saying is it has a long way to go between this positive pulse wave and this trend line resistance. So this trend line resistance is telling you it's in play. All right? You got a rally alert with a trend line resistance of $32.99. So you're looking at least a $10 run if 2173 is taken out. Well, it was taken out and it gapped up and took it out today. So here you go. You're looking to ride this baby and take profit on your initial trade at $32.99. And or add on to the position at $32.99. The system is telling you take profit and or add on the leg into this position at $32.99. If $32.99 is taking out, it's gunning for the resistance high of 33.57, which is it's going to blow past it. It's going bye-bye. And then you'll be hitting new 52-week highs and whatnot. That's what you want. That's the power of the pulse wave system. Okay? So that's all we're going to do now as far as trading the gaps. Hopefully everything is self-explanatory now. And with that said, bulls make money, bears make money, but pigs get slaughtered. So remember to take what you can, give nothing back.